Archer Aviation is building flying taxis. The stock is down 12% this year, but up 153% in the last 12 months. Today it trades around $8.60, near the bottom end of its one-year chart. So here's the question: can Archer actually keep climbing, or is this the peak before reality smacks investors right in the face? 6 of their Midnight aircraft are in production, and 3 are reported to be in final assembly. They've landed FAA certifications, they're the official air taxi provider for the 2028 Olympics, and they're breaking into the UAE airspace. But there's a catch. Archer is still pre-revenue. No sales. Last quarter, losses exploded 93% to over $200 million. The only reason why they have cash is because they've raised over $1 billion in new equity. And here's the signal that I'm watching. Archer just flew 55 miles in a single test with United Airlines CFO sitting in the front row. That's not hype, that's validation. So in this video, I'm breaking down whether Archer is a smart bet for retail investors, why Wall Street still calls it a moderate buy with 110% upside from today's prices, and the exact risks that could turn that dream into a nosedive. My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor, which is a good thing. I'm not here to sell you any expensive retirement dream. I'm here to break down the numbers so retail investors like you and me can make smart decisions with your money. Archer Aviation is developing electric vertical takeoff and landing aircraft. The company's goal is simple, right? Replace an hour of stop-and-go traffic with a 10-minute flight. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Sounds like science fiction maybe, right? But this is happening right now. In fact, their flagship plane, Midnight, is a piloted 4-passenger aircraft that can travel approximately 100 miles and cruise at speeds of 150 miles an hour. The company prides itself on its core values. That's results, innovation, optimism, collaboration, and safety. And if you've followed Archer, you've seen those values guide a steady march of milestones, from hundreds of test flights to a significant order with United Airlines and the groundbreaking of a large-scale manufacturing facility in Georgia. So the question is, can those values actually translate into long-term investor value? Let's find out. So Archer's been in the spotlight because of its flagship product, the Midnight aircraft. 6 aircraft are already in production, with 3 in the final assembly stage. The FAA has issued key certifications, and Archer has been named the official air taxi provider for the 2028 Los Angeles Olympics, plus it's making headway into the UAE airspace. That's not just PR, that's credibility. The Olympics deal alone puts Archer in front of millions. Midnight is moving from concept to reality, and that's what investors are paying attention to today and what I'm going to talk about more about in a bit. For now, though, I'm going to talk about the stock price because really, that's why you're here, right? Trust me, this chart is going to surprise you. And if you want to follow along, just scan this QR code. So it's been a turbulent year for Archer, down 12% year to date, but up 153% in the last 52 weeks. That's volatility, and volatility creates opportunity if you know how to read it. Today, Archer Aviation stock trades around $8.60 and is trading near the bottom of its one-year chart. Despite that, a consensus among 10 analysts rate Archer Aviation a moderate buy with as much as 110% upside. So you could say Wall Street still sees massive potential here, even when the stock looks beaten down. It's important to note that Archer's midnight air taxi is still pre-revenue. That means the company is relying on capital raises and strategic backing from partners like United Airlines, Stellantis, and BlackRock to fund operations and development. And this is the key, right? Pre-revenue stocks live or die on their ability to raise cash. And Archer, they've been proving they can. In its most recent quarter, Archer reported a net loss that ballooned 93% to $206 million year over year. And a chunk of that came from operating expenses of $176.1 million. On the other hand, net cash flow rose 2,348% to $889 million. Net cash flow reflects the total movement of money, including financing and investing, which came from more than $1 billion in fresh equity financing. Translation? New stocks were issued. And this isn't surprising, since they're still in the costly build-out phase with no commercial revenue yet. Free cash flow is simply the money left over after covering all the daily expenses and big investments like factories. So running negative here means they're still spending heavily to get Midnight to commercialization. So the company may be losing money now, but that's a necessary investment for the improvement and launch of its flagship product. Archer's ability to raise capital has also kept its overall cash flow positive, giving it breathing room for its next stage of growth. However, it will need to control costs, especially when it's time to aim for profitability. And that's the razor's edge, keeping spending to scale, but not so much that investors lose faith. And that begs the question, how does Archer plan to turn that cash cushion into actual growth? Because cash cushions, they don't last forever. They burn fast. Well, the answer relies on the anticipated commercialization of its flagship, the Midnight. In Archer's second quarter update, they said that 6 Midnight aircraft are in production, including 3 already in the final assembly phase. Archer was also tapped as the official air taxi provider for the 2028 Los Angeles Olympic Games, a high-profile showcase that could put the brand in front of millions. And then internationally, the company also launched its UAE Launch Edition. It's a program that works in collaboration with Abu Dhabi Aviation and the Abu Dhabi Investment Office. And that underscores its efforts to bridge the gap between prototypes and commercial deployments. That's international validation, which is exactly what most startups never get. Aside from that, Archer showed off real progress with its longest piloted flight yet. Midnight flew 55 miles in just over half an hour, hitting speeds above 126 miles an hour. Congratulations to Archer Aviation. Even United Airlines CFO was there watching, which is a big vote of confidence from one of Archer's earliest backers. So with test pilots now flying the Midnight regularly, the company is demonstrating the aircraft's maturity as it progresses towards FAA approval and commercial launches. So you could say that Archer isn't just selling the dream anymore, they're proving it with real flights. By the way, if you want to get more videos like this one, do hit that like and subscribe button so you don't miss out on any of my future videos. So it's normal for startups to lose cash, right? But that doesn't automatically mean that profits will follow once commercialization begins. As Archer gets closer to launching its flagship aircraft, its spending continues to climb. The company has been spending more money every year while losses are also increasing. Even with a strong financial position, Archer cannot afford any delays or missteps. Missing milestones would risk not only investor confidence in the stock, but also the support of potential backers looking to fund the next stage of growth. And with a pre-revenue company, timing is everything. Miss one key milestone and the market will punish you faster than you can hit that sell button. So with all that out of the way, I want to ask, is Archer Aviation a good buy? Well, here's the thing. Valuation today is tricky because, as I said, Archer is still pre-revenue. That means that the common ratios like price to earnings or price to sales don't apply, right? There's no profit and there's no sales to measure against. What we can look at is price to book. The book value is simply the company's assets minus its liabilities, or in other words, what the company would be worth if it sold off everything today and paid off its debts. Archer trades at around 3.41 times its book value. That's much lower than peers like Joby, who's at 13.4, and Eve, that it's at 87.14, though it's still higher than Blade at 1.73. Based on that, Archer doesn't look wildly overvalued. In fact, relative to its peers, I think it looks fairly valued given its stronger balance sheet. So if you're comparing Archer to the pack, it looks like one of the more rational bets. With that, I can see why Wall Street analysts rate Archer stock a moderate buy. If Archer hits its milestones, which I think it likely will, the only question I have is when, the upside here could be significant. However, anything can happen between now and midnight's full commercial release. So I'd say that today, Archer is a bit of a risky bet. If you like Archer and have a small portion of risk capital available, then maybe it's something you can consider. But for more conservative investors like me, even though I like what they're doing, actually it's very exciting, I think I'm going to need to wait on the sidelines a little bit and see some profits flowing to their bottom line before I hit the buy button. Because in this game, excitement is great, but cash flow is king. But what about you? Are you buying into Archer's vision this year? Let me know in the comments below. And while you're there, if you found this video useful, do hit that like and subscribe button so others can find it as well. Well, folks, that's it for me today. I wanted to thank you so much for watching, and I'll see you next time.